In this discussion, we will discuss the discussion question of discuss what ratio analysis is and how it is useful. If we see a discussion question like this or an essay question such as this, if time allows, our goal typically is to add more information rather than less information, that making it more likely that we touch on the information being looked for within an essay question and adding to the discussion being the typical goal within a discussion question. Keeping that in mind, let's go through this one more time. Discuss what ratio analysis is and how it is used. The typical starting point for most people, and it's not a bad starting point, is to go through what the ratio analysis is in terms of definition and go through the calculation of ratio analysis and go from there. But it is quite possible, if we're looking to add more information to a discussion or an essay question, to take a step back and say, all right, well, what is ratio analysis? It's going to be, why do we do it? What's the point of ratio analysis? Who cares? What's the usefulness of it? To take a step back, it's going to be a part of financial statement analysis. That's going to be the broader category, so we can discuss that. Taking a step back from there, who would use financial statement analysis? Well, you could have both internal users and external users that would want to use financial statement analysis. The internal users of financial statement analysis may include people like management that want to take the financial statements, use ratio analysis on it to get better insights about the company to make better decision-making processes. The external users, some people like investors, people like creditors, the bank giving a loan or something like that, may want to use the ratio analysis in order to determine whether or not they want to do business with the company in one way, shape, or form. Once we have that, we could discuss and say, well, what type of analysis would they do? Ratio analysis, which is a component of financial statement analysis, general analysis in total. What kind of financial statement analysis are there of which the ratio analysis is included? The other components of analysis typically include vertical analysis, horizontal analysis, and then of course our ratio analysis. So you could discuss then vertical analysis, horizontal analysis as a comparison, comparing and contrasting the other components, the brothers and sisters, in essence, of the type of analysis we're looking at here, ratio analysis. I won't go into the detail on that, but you could do that if you so choose in order to add more discussion to a discussion type question. And then we're going to go into the ratio analysis, which is where most people would basically start. And the ratio analysis is going to be picking up certain numbers from the financial statements, typically the balance sheet and the income statement or the statement of cash flows and equity, and doing comparisons with those related numbers in the form of a ratio, a comparison, typically a division problem, in order to get information that will be useful for decision-making processes. The usefulness depends on who we are, of course, internal user, external user, management, creditor, outside the bank, outside of the company, or so on and so forth. So those ratios then could be expressed in the form of a ratio. The answer could be expressed in the form of a percentage or in the form of a decimal, but the typical format for most of the ratio analysis is going to be a ratio. Note that we do some other calculations that might include addition and subtraction type problems within our analysis of the financial statements, but the ratios are often more useful because the ratios are something that we can compare not just to ourselves, to past performance, but to other companies and other industries. So ratios are going to be something that can help us to compare to prior data for ourselves. They can allow us to compare to other companies within, we can benchmark to other companies of different sizes because the ratio is something that we can compare, whereas the dollar amounts are not typically. We can't compare just dollar amounts. Any kind of measurement of performance, whether it's your job performance, sports performance, you almost have to use some kind of ratio to have a fair comparison. It's the only way to account for the fact that there's different sizes oftentimes. And so we have to use relative items in order to make a comparison. So we can compare to other companies, we can compare to industry standards, we can compare to just general rules in terms of what's a good ratio or a not a good ratio. So that's going to be that's going to be the average things you can go into. Now, then you could also go into the types of ratios and go into a whole lot of detail, of course, with types of ratios. If you do so, you might want to start off with the groupings of ratios. Groupings of ratio analysis, common groupings include liquidity and efficiency to measure how well a company's able to pay off their short-term obligations. And then we have ratios that include the solvency ratio that have to do with long-term type of obligations. And then we have ratios for profitability ratios, performance type ratios, things that typically have to do with the performance statement, the income statement, the timing accounts. How is the company doing in terms of performance? And then we have market prospects ratios that typically have to do with the market opinion of the company. What does the market think about the company? How do we get that? We use information that isn't in the financial statement, or include those, which include things like the market price when we analyze the company and determine the value of the company. And then, of course, you can go into each of those categories and start picking out ratios and giving examples of the ratio. You can do example calculations of the ratios, and then you can start talking about what makes the ratio go up and down. What kind of things would be good or bad for the ratio? What are going to be the general characteristics of the ratio? And obviously, you can spend a whole lot of time doing that. So the liquidity ratio, just to list them out, liquidity and efficiency, the common two are the current ratio, acid test ratio. Also have the accounts receivable turnover ratio, the total asset turnover, the inventory turnover, the days sales uncollected, days sales in inventory. You could list out any one of those. You could then discuss what the calculation would be. You could give an example of the calculation. You could then discuss what types of things would increase or decrease the calculation, what would make it look better or worse, and why. Then we have the solvency ratios, which would include debt ratio, equity ratio, debt to equity, time interest earned. Again, you can take a look at all of those ratios, discuss the calculation, what's the formula for it, examples of the calculation for it, then discuss what makes it go up and down. Profitability ratios include the profit margin ratio, the return on total assets, return on common stockholders' equity. Once again, you can go through those items, discuss what the calculation is, give some examples of it, what types of things would make it go up and down. Market prospects ratio includes price earnings ratio, dividend yield ratio. Once again, you can go through those ratios. You can tell what the calculation for those ratios would be, give examples of it, discuss what types of things would make that ratio increase, what types of things would make it decrease.